Hey guys, this is Karthikeya Kantwal from Apex FinServe and I'm back. This time not with your daily dose of charts, but instead I'll be touching on a different topic from the trading segment. Now, I have spent a good portion of the last week researching and looking into the cryptocurrency scene as a whole, both the sides of it, the mining as well as the trading side. And I'll be sharing with you what I have learned from it, or simply said my 2 cents from what I have recollected so far. Now, starting with the cryptocurrency scene or the cryptocurrency market in general, before you decide to participate with your hard earned money or your saved money or whatsoever, before you put your money at stake, you should know briefly what exactly is the thing that cryptocurrency is. Now, when I speak about cryptocurrency in a simple layman language, then a cryptocurrency is nothing but a cross between a currency and a digital asset type. Like a currency, you can use it to pay for things. That was the ideal intended goal for all of the cryptocurrencies. Like a digital asset, you can invest in it for long term gains, which is what people have started to do now. You're not buying exactly a currency as with what you do in forex trading. Instead, you're buying a digital asset for a set price. You're buying the idea behind the coin, which is supported by an underlying blockchain technology. Now, this holds valid. This basic idea or this basic logic holds valid for all the cryptocurrencies, or you can call them as Bitcoin, altcoin, meme coins, whatever you want to say it. Almost everything is backed by a logical idea, and when you invest your money in it, you're investing more so in the idea rather than the actual inherent current market value. Now, the cryptocurrencies backed by ideas and logic have seen exponential growth due to ease of participation, global and decentralized nature. Now, ease of participation, it really is really simple once you get the hang of it, of how wallets work, how different exchanges work. In the cryptocurrency segment, participating is really simple. You can do it all day, all night, whenever you want to. It is global in nature, which means you can do it pretty much in anywhere, any corner of the world. Simply, all you need is a good internet connection and a nice device. That's it. Now, this is a fresh asset class. It is fairly new when we compare it to the exchanges that we have, or the financial markets that we speak of generally, which is the equity market or the bonds market. And these things, they have been around for a many decades. However, when you compare it with the cryptocurrency market is fairly new. It has hardly been around for, as far as I know, a decade and a bit more. So it is still maturing, but however, in a very brief time, it has scaled to great heights. Now, what I have on screen here is a simple market cap valuation, or the current market capitalization of the leading cryptocurrencies that we have, starting of course with the two that almost everybody knows, that is Bitcoin and Ethereum. Bitcoin itself, now this is the market capitalization as on today. I made this in the afternoon. I guess it has fallen a bit now, so it might have reduced by a bit. However, in the afternoon it was at 685 billion, and a lot more. I can hardly count the entire set of numbers. Backed close second by Ethereum, which is 257 billion, and then US Tether, which is not actually a cryptocurrency but what you exchange to buy and sell cryptocurrency. Then you have Cardano, Dogecoin, Binance Coin, and so on. Now, all these coins have a huge market capitalization, and to be honest, most of them will far exceed all of the financial securities that we trade on the NSE and BSE. So, in terms of the size, it is far greater a market than ours, even in terms of volume. The primary reason for that being, in my opinion, is the global nature of it. As I said, the entire world can participate in just one cryptocurrency. Now, moving on further to simplifying the hallmarks or the best points or the leading banner points of cryptocurrency exchanges, they have just four things going for them. First is their vast reach, as I said, anywhere from the world, a good internet connection and a good device. Second, insulation from global events. They are not directly linked to any political party, they are not linked to any government as such, and are not really directly affected, or on a large scale, not directly or indirectly, they are rarely affected by any of such matters. Third, freedom for large fee and regulation. Now, this is a positive point but can also be a negative point depending upon what exactly are you looking to do in the cryptocurrency market. We will discuss on this later. The fourth is the potential gains to be made given their volatility, which provides incentives for continued interest and development. Now, if you just look at the chart for Bitcoin and or Ethereum, to be honest, you'll see that talking about Ethereum, it has gone from 600 700 US dollars, I guess, from a couple of months or hardly a year ago to around 2500 to 3000 US dollars now, which is 300% of a price hike. Now, this gives people, to be honest, unrealistic expectations, but that is the greed factor that lures them into the cryptocurrency scene as a whole. Now, moving on to comparing it with the markets that we have been trading in, talking about the NSE and BSE or the Indian financial markets. This is a simple relative comparison between the stock markets and the cryptocurrency market as a whole, not a particular coin or not a particular script. Now, there are mainly five key differences between participating in either of these markets, and I have noted them out for you. Now, there are mainly five key differences between participating in either of these markets, starting first with the maturity of markets. Now, I have already told you that a couple of minutes ago that if you compare their ages, then cryptocurrency is pretty much like a baby in front of the financial markets of the world. Stock exchanges have been trading far longer than cryptocurrency and are therefore more mature. Given their maturity, they have high volumes and diversity of trade. Cryptocurrency exchanges, on the other hand, are still young and in a state of continued development. Although there are moves to increase the regulation of exchanges to boost investor confidence, much of their activities currently sit outside of regulatory and political spheres, as I told you right now. Given their short history, the volume and diversity of cryptocurrencies being traded is also far less than that of the stock exchanges as a whole. Now, I also said some time ago that the volume is greater. However, the volume is greater in very few selective currencies, not in the entire market as a whole. The second difference between these two markets comes in what you own. Now, when you buy crypto, you own a certain amount of that digital currency. Someday, it might be possible to use these in transactions as easily as credit cards, but it's not happening right now. Right now, it's a simple store of value that you can hold on to or sell depending on your preference. By comparison, stocks are offered by companies as equity or ownership of that company. The third point of difference that we have comes in the volatility. Now, both crypto and stock markets are pretty volatile. They both can go up and come down. They both contain plenty of leverage and hence plenty of inherent risk. However, the difference between the sheer volatility and the sheer extent of move that can happen on crypto versus the stock markets is pretty much a day and night difference. Just if you look at the charts today, you'll see that Bitcoin is around 13% down, Ethereum is around 20% down. So they do not have any circuits of any kind, and the volatility just it keeps on storming around. I have seen the charts go from around minus 15% to plus 2 plus 3% in the same day, and that happens quite often. Now, that is good if you are an aggressive trader, but that is not really going to support your case if you are a fairly risk averse trader. You have to be able to know exactly how to make the most of such a volatile market. The fourth comes in the governance part, or how they're governed part. Now, in the financial markets, we have SEBI, we have NSE, these government bodies who govern how exactly the free market is functioning, and if there is something wrong, if the people are losing money because of a particular racket or a particular group of people, they are immediately dealt with. However, in the cryptocurrency market, that is not the scene. That was the whole idea, that transactions can happen without the need of a middleman or an assurer. It is completely decentralized. For each cryptocurrency, the governance is distributed among those involved with growing and maintaining its technology, pretty much the developers of that cryptocurrency. The final and the most important one, to be honest, for most traders is going to be the hours of operation and the leverage offered. Now, the crypto market runs 24/7, 365 days a year. It never takes a break and it never will. However, on the Indian side of things, you do know that Monday to Friday we work 9 to 3. After that, equity is closed. Currency stays on till I guess 5:15. Commodity stays on till 11. So if you want to participate, you have to adhere to the market timing itself. The market timing will not flex itself for you. However, in the crypto, that is a big moon. You can trade whenever you want to. Now, given there are some conditions that not all hours of the day are equally volatile or equally participatory in nature. However, nonetheless, on a very basic front, you can trade 24/7, 365 a year. On the leverage front, we have had quite a leverage debacle in the Indian scene, where the NSE and SEBI are hell-bent on taking away the leverage that is being offered. I believe it was last year where we were being offered around 25 to 30x on bracket orders. It was reduced to around 15x, and then it's going to finally stop at around 5x, if I'm not wrong. Now, these are the points of difference between the Indian financial markets and the cryptocurrency. However, even a bigger point is the certainty of the financial markets, Indian financial markets, and the uncertainty of the crypto markets as a whole. What I mean by that is the future or the longevity or the going concern of the markets as a whole. Now, the Indian financial markets, they have been here for decades and they're going to be there for the coming decades without any doubt whatsoever. However, the cryptocurrency market isn't really as assured in nature. You can participate in it, you definitely should get a taste of it. It is quite rewarding and entertaining both. However, I would definitely not advise you to shift to cryptocurrency trading as a whole and leave the financial markets behind, because the future in cryptocurrency is quite uncertain. No one really knows what's going to happen 3, 5, 10 years from now. The original goal of cryptocurrency was for it to one day be accepted as a form of payment like cash or credit card. While that hasn't happened yet, there is gaining interest in cryptocurrency, and many people who regret not investing in it earlier when the price was lower is leading to far greater participation now. However, the government has tried to play spoilsport. In fact, many a times China has tried to ban cryptocurrency in its own state. In India as well, we did try to put a ban, but that was refused by the Supreme Court. Now, the government is saying that they are trying to put a special bench on how to deal with cryptocurrency and will try to regulate it in the future. How that goes is a big uncertainty. So for now, I would definitely advise you to just get a hang of it. If it's going to be there for the coming 2 3 years from now on, you can keep on trading for these 2 3 years. Use a small account, keep on compounding and grow till whatever amount you can. Now, talking about the biggest part and the reason why people participate or want to participate is the diverse methods of earning through cryptocurrency. Now, primarily, you can do two things, as I told you in the beginning of the video. There is the mining part and the trading part. Now, over the past, I guess, a couple of weeks, I have been trying to get my hands dirty in both the cases. From the mining front, I have had my fair share of experience recently, and I can give my comments. Now, cryptocurrency mining is, in simple words, it is the simple process in which transactions between users are verified and added to the blockchain public ledger, which happens through your hardware system. The process of mining is also responsible for introducing new coins into the existing supply and is one of the key elements that allow cryptocurrency to work as a peer-to-peer decentralized network where it forms a whole entire web of units without the need for a third-party central authority. The mined currency, along with rewards from transaction fee, are then transferred to your wallet as your revenue. Now, mining in itself is a fairly complex topic. There is a lot that goes underneath it, such as proof of stake method, proof of work method. There's a lot that's going on right now. You can mine different coins. There are different hardwares, what to use for which coin. I have been mining. I have started mining recently. However, if you want me to create a separate video on cryptocurrency mining, introduction to it, how to start with it, how exactly to proceed, what hardware to use and what not, let me know in the comment section below, and I'll prepare a separate video dedicated entirely to cryptocurrency mining over the next weekend. The aim of this video was to highlight the cryptocurrency trading and investing part. However, I repeat this again and again. Before actually putting your money as margin or investment in the crypto market, you must realize that it is inherently very risky in nature. In simple words, trading in cryptocurrencies like Bitcoin and Ethereum is very much similar to trading through technical analysis of NSE commodities or anything else. The major difference lies in the way to get started, which is to transfer your funds from the bank to the wallet to the wallet to the exchange. It's not as simple as what we have in the Indian financial markets, where you simply IMPS RTGS the amount from your bank account to your demat account and you're done. यहाँ पे you have a series of steps that you must follow in order to bring your money from one place to the other place safely. Now, I have listed these steps below. Sadly, I could not record the screen with these steps because I didn't find a way to record the bank transaction without actually revealing my bank details. Now, the steps are fairly simple. I have written them down exactly as they are to be performed, so you should not have any problem as such. Now, keep in mind, these are my personal preferences when it comes to the wallet as well as the exchange. The exchange that I'm using is Binance. It is one of the leading exchanges, and the wallet that I'm using is CoinDCX, simply because WazirX has been having lots of downtimes lately. Now, the first step that you're going to do is to transfer your funds from your bank account to your CoinDCX accounts using MobiKwik, which is a simple OTP based transaction. From there on, it starts to get different from what you're aware of. The second step is to buy USD Tether or US dollar Tether from CoinDCX using those funds. It is available in the market section of CoinDCX. Think of it akin to exchanging your Indian rupee for US dollars. However, all of the trading happens in respect to US Tether, not US dollar directly. The rates are also fluctuating just like US dollar, so it changes pretty much every second. So you have to figure that out right now, what the rate is at which you're going to buy, of course. The third is going to Binance. Now, यहाँ पे you have to be pretty much sticking to the steps. You go to Binance, you select your wallet, you select spot from the sublist that you get, and then you select USDT or US dollar Tether. Once you are done with that, after you select US dollar Tether, you select deposit, and then you select TRC20. Now, this is important. If you don't select TRC20, you will be levied a fee of about 30 USDT, if I'm not wrong, which is quite a significant amount, about 2400 2500 INR. Now, once you have selected the TRC20, you will get a wallet address. You have to copy that wallet address from there. Now, the most important thing in the entire transaction is going to be this wallet address that you get. Keep in mind that while copying, if you make a mistake, if you edit it any way whatsoever, then the money transferred from CoinDCX to Binance will not show up in your account. It will go somewhere else entirely, and that money cannot be recovered whatsoever. Now, once you have the wallet address copied, you go back to CoinDCX, you click withdrawal, select TRC20, you paste the Binance address that you copied, and you just click transfer. That's it. Your funds should be reflected in Binance within 5 to 7 minutes maximum of the transfer. Once again, I cannot emphasize more on this. Please make sure that the wallet address you copied is correct, else the money transferred will be lost and cannot be recovered whatsoever. To withdraw money from Binance to CoinDCX, the exact steps, but in reverse. Now, let's say you have the funds stored, you have the funds transferred into Binance, and you are now ready to go to trade. Now, getting started with cryptocurrency trading is a bit tricky here as well. There are some things that you have to keep in mind. Once you have transferred, there are ample of currencies that you're going to be able to trade on, including many meme coins, altcoins, and whatnot. However, it's recommended to trade only with some history and market capitalization so that you don't end up in a position that you cannot exit. Now, in simple words, only the top 5 cryptocurrencies are worth trading, in my opinion, which makes hardly handful of coins, which is Bitcoin, ETH, Cardano, Ripple, and so on. Now, one thing you must understand before entering the cryptocurrency trading scene is that the leverage that is being offered is absolutely insane. If you have been trading in the Indian financial markets, trust me, you are not prepared for the kind of leverage that is being offered. We have been used to around 5 to 10x, maximum 15x of leverage. However, on Binance you get up to 125 times of leverage, which means you can trade 125 times your margin amount. However, of course, there is a condition that you can only take or handle losses up to your initial margin amount. Anything more than that, you will get margin calls, and the broker will happily close off your position immediately once the loss starts exceeding your margin amount. Now, we do recommend, of course, not to use the entire 125x. That would be pretty stupid if you are new to the market. Use not more than 50x. If you want to get a small taste of the market, you can start with 10x leverage and then increase your leverage once you get comfortable with the entire charts. Now, just like the equity markets, there are a couple of pointers here as well, especially pertaining to the risk management side of things and the position management, which is going to really decide whether or not you're going to succeed as a cryptocurrency trader. Now, managing risk and sizing positions are a part of the basic risk management palette that is being handed out to every trader since the beginning of trading as a whole. Now, there is a minimum procedure to be followed while trading cryptocurrency to calculate the risk and reward ratio for return. Risks are always associated when your cryptocurrencies or your wallet balance is exposed to trading in contract for differences or CFD notes. There are a few basic points which could help you manage the risk, which is given below. Now, starting with the first and the most simplest one is controlling your losses. I have told this again and again. Never risk more than what you can afford to lose. One of the major aspects of any trading is to control the prevailing losses. Now, this is even more so important in the cryptocurrency scene because of the heavy leverage associated with it. You must always have a well-defined stop loss in place. It can be, decided using moving averages, pivot points, ATR, or anything, but it has to be there. You cannot just enter a position hoping for it to go in your place. You have to have a system stop loss. If you don't want a system stop loss, you have to have a mental stop loss, but you must be sure that you will stick to it in a disciplined method. Otherwise, trust me, it is very, very easy to blow your entire account in the cryptocurrency trading scene. The second rule is understanding leverage and exposure. Now, this is also very, very important because, as I said, if you are somebody from the Indian financial scene, you're not really going to be used to the sheer amount of leverage that is being offered, which is why I suggest that you start on a really, really small account, 3,000, 4,000 rupees. That's much more than enough to practice. And then you can start with using leverage of 5x, 10x, 20x, and henceforth once you start getting the hang of it. Now, you have to know that more the leverage, more the exposure of risk and reward. You should understand that the leverage provided by a particular exchange in a particular cryptocurrency pair, and then you need to be able to calculate how much it will impact your P&L statement as a complete trade. Thereafter, you have to calculate the impact of maximum movement in your trading account. You have to decide how much loss you can bear in your trading account. When you know the impact on your trading account, it will be easy for you to decide the stop loss placement as well as the maximum loss bearing limit. Otherwise, as I said, your account may bear unexpected loss and you might even face margin calls. The third point is the risk reward ratio. Now, when it comes to risk reward ratio in equity, we play around with it a lot. I generally take trades with 1:1, 1:2, but I have also taken trades with inverse RR where my risk is more than the maximum potential reward on a particular trade. However, here I have a completely different advice. Cryptocurrency is a place where you can expect, unholy amounts of targets. I have seen people targeting 5%, 6%, 10% in a single day, and funnily, their targets are even met. So, यहाँ पे what really plays a big role is the very, very great RR that you can set if your entries are correct. For example, talking about BTC, I have seen people trade with stop losses of around 300 400 points, and then they end up booking, let's say, 3,000 4,000 points, which is an RR of 1:8, 1:10, which is almost impossible to get in the equity scene. So instead of increasing your contract note or your account size when trading in cryptocurrency markets, I would advise to go for small quantities but greater targets, and then compounding your account as a whole instead of taking larger contract sizes. Just hope for bigger targets and slowly start increasing your contract size. The final part is again something that we repeat a lot on the equity side of things, that is controlling your emotions. Now, emotion in trading is considered to be wrong as it deviates you from your trading plan. The unending cycle of greed and fear always plays its role. Once your trading plan is set up, then that should be followed despite any divergence. There are several kinds of emotions, which are greed, frustration, worry, fear, hope, and etc. You cannot eliminate 100% of it from your trading, unless, of course, you are using an algorithm or a bot, but you can minimize the human emotions, or at least the impact of human emotions, as much as possible using disciplined methods of trading. Now, that was from the risk management perspective. Now, talking about the technical side of things, if you have been trading in the Indian financial markets, let's say you have been trading Bank Nifty, you have been trading silver, you have been trading crude, these kinds of things, and you are used to simple technical analysis which consists of price action, then you'll be really, really enjoying the charts that you have on cryptocurrency. Now, for now, I'm only going to be considering BTC charts. If you want to share charts, if you want to share examples, you can share it at our Telegram channel @ApexFinServe or @ApexBackSupport. If you want me to verify your charts, I'll happily do it for you. Now, considering this example, let's say we have a BTC chart. Now, as you can see, if you have watched my prior videos consisting of structure analysis, Fibonacci, and whatnot, I have uploaded a lot of videos on how to learn and understand price action or simple technical analysis. Feel free to check them out. They will help you a lot when trading cryptocurrencies. Now, the best thing about it is the clean charts. and the absolute lack of stupid gap ups and gap downs that I'm so very tired of in the Indian markets. Since it is open 24/7 365, you technically cannot have a gap up or a gap down because the market is always running. Luckily, despite the complex theory behind the existence of these digital coins, trading from these charts requires a thought process similar to trading volatile equity or index charts. From my experience here, as I said, I have been looking at it since the past 2 3 weeks. Price action reigns supreme, simple structure analysis or candlestick analysis, but even smoothly when supplemented by simple indicators such as heavy hitting larger SMAs, you have demand supply zones, Fibonacci retracement, MACD, RSI, and whatnot. Now, to check out these concepts, as I said, check out the previously uploaded videos. I will be linking them after the end of this video and also in the description below. Now, I have attached one chart and I'll be looking at the current chart as well after I discuss this with you. You can see we had a simple 50 and 100 SMA death cross here, after which the price broke the previous swing low as highlighted by me and started making fresh lower highs. I also took a short entry here and it did hit the target. In fact, it will be running right now. Yeah, as you can see on the screen, that is the chart that I attached in the PDF that I shared with you as well. Now, the time frame that I use here is 1 hour. From my experience on the BTC charts, I have learned that anything less than an hour tends to give many fake structures because of the volatility. Anything greater than 1 hour is nice, like 1 hour, 2 hour, 4 hours. Daily is a bit slow for me. However, 1 hour is the sweet spot. Now, as you can see, it was making a lower high structure formation after the death cross that I showed you guys here. Now, this is a simple 50-100 SMA death cross, nothing too complicated. Now, I took a short position once it broke the previous swing low after this small retracement, and my immediate target was the nearest swing low that it had. Now, the stop loss that I had here was just above the moving averages, so I took an entry at about 36,500 ish. My stop loss was at 38,000. It's about 1500 points ka stop loss. My primary target was 32,500 to 33,000. Now you can see 1500 points ka stop loss tha and around 3,500 points ka target tha. In the beginning as well, it's a 1:2 ka trade. If it goes down further, I'm still in position. So if it does go down further, I wouldn't really mind it. Right now my stop loss is at cost, so if it does bounce up in an explosive short covering, I am covered. But if it decides to check the previous low point of this week here, which is 30,000, then that's going to be great for me as well. That will be straight 6,000 points booked with a 1500 point ka stop loss, which becomes a 1:4 ka trade. Now, as I told you guys, the quantity is going to be really low because I'm not playing on the quantity here, but rather the length of the move or the strength of the entire momentum that is being visible on the chart itself. Now, the same thing can also be observed on different time frames. As I said, if I check the 4-hour time frame, we have the same thing here as well. You have a simple death cross followed by lower high momentum. It can also be seen on a 2-hour time frame. Where is it? Now, this is one reason why I prefer to use Binance. The charts are really clean on the website. It feels pretty much the same interface. It is TradingView, but it feels really similar to trading something like Bank Nifty, which runs 24/7. Now, as you can see, it is trying to break the support, so let's see where it goes. If it hits 30,000, I'll be more than happy and I will close my trade there. Now, this is it for an introduction to the cryptocurrency scene as a whole. This is all the basic information that you need to start participating in the markets. If you want me to share more charts, or if you want me to share charts regularly of Bitcoin, Ethereum, and a couple of other cryptocurrencies, let me know in the comment section below, and check out our Telegram channel @ApexFinServe, because of course that is where I'll be sharing all the charts. If you have any questions for me regarding cryptocurrencies or anything related to trading in general, feel free to text us @Apex back support on Telegram or even on Instagram @ApexFinServe, and we'll be more than happy to handle your queries. One more thing, this was all that I had to share from the trading scene, but if you are a miner or if you are somebody who has seen the recently viral social media videos about cryptocurrency mining, I can tell you that it's not all fun and games. It's a slow story there too. But if you want me to make a separate video about cryptocurrency mining, what's the hardware, as I said, a guideline to how to enter the cryptocurrency mining scene if you're not a trader, if you want some passive income, the cryptocurrency mining is a fairly decent place to start if you have realistic expectations with your investment. If you want me to make a separate video on cryptocurrency mining, let me know in the comment section below. Now this is all for you guys for tonight. If you like the video, don't forget to leave a nice comment, like the video, subscribe and press that bell notification icon as well. I'll be back soon. Thank you so much for watching. Have a good night. Bye.